Hello guys, this is Sochi and you're welcome to Sochi Forex. In this video, I want to share with you exactly how I trade my candlestick pattern. Be sharing with you exactly how I profit trading my candlestick by doing a perfect candlestick analysis. So we are looking at how we can analyze the candle in a very simpler way, even as a beginner. In this video, I'll be sharing with you my ideology behind candlesticks and how exactly I read each of the candlesticks before making my entry. And it is important for you to know that how I see my candlesticks when I open my chart, I look at it like this and visually you can see that price is moving to the downside without any technical tools. And here with our technical tool, our trend line, we can see that price is moving towards the downside. So this is a downtrend. And secondly, price is below the middle Bollinger Band, and so we are in a downtrend. Okay, so there are two ways I will be seeing this considering our present market condition. Here we have a chart pattern that just played out and price broke out of it. So you can watch our previous video on how to trade chart pattern. And if we are trading now, how we mark our indicator, we see market ranging, we draw our chart pattern. This is the simple way I will trade this. When price break out of this chart pattern, the candle break and closes out of it. Now this is another candlestick that closes out of it. So I will be making my entry on after the close of this particular candle. This one now that just closed, that is when I'll be making my entry. This one closed out of it, but I will need a follow-up candle for me to be able to take my entry. And the follow-up candle is this particular candle. So when I see this candle, I go in and I take my entry. And at the same time, I can mark this zone as mine. I will mark this zone as either my area of support or my area of resistance. So all of this zone, I have it marked out as my area of supply. I have it marked out as my area of resistance. I have it marked out as my order block. The question is why? There is a liquidity that was sitting at this downside. So price all the way has been building up liquidity here by this range. This range is a liquidity build. So price over time build up this liquidity and sweep out this liquidity that is lying at this downside. So the liquidity has been taken by this move to the downside, and we said every structural point is validated by a liquidity sweep. Secondly, by the impulsive move that goes out of that point is also another consideration of what validates my structural point. So, and here we can see, I want to see at least full bearish candle for a supply, for a resistance to be a valid one. I want to see, and you can see this is the first candle, 1, 2, 3, which shows trend. A retail trader cannot move price in this way. And you can see when the price break out of this, I will follow this follow-up candle. Here will be my entry, and my stop loss will be above the high. That is just about that. Now, what is candlestick and how do I analyze my candlestick? Every candlestick that form, I see the candlestick as a fight between a buyer and a seller. And what I'm saying in essence is that in every candlesticks there is a buying trade and there is as well a selling trade. That is why we always have wick on the candlestick, which shows a rejection of price. So in every candle you are seeing, there is a buying order and there is a selling order. So every candlestick is determined by a three outcome. First outcome is either buyers win, second outcome is either sellers win, while the third outcome, nobody wins. For example, you can see this bullish candle. It pushed up, buyers won. Here it closes bearish, sellers win. But look at what happened here. In a scenario where we have a doji, like this type of doji, nobody wins. So every candle determines my outcome and my trading decision. For instance, this price has been a downtrend and now price has pulled to this zone. And since price pulled back to this particular trend line, I'm referring to this trend line here. Price has pulled to the trend line. And now that price is at the trend line, I will need a candlestick pattern for me to make my entry, right? It is this candlestick that will communicate to me when sellers are in for me to sell because it is a downtrend and here is a retracement. So there is no way I will know that this retracement is over until the candlestick indicate. So because price is touching your trend line alone is not a guarantee that you should make an entry. The fact that price is touching your support, your order block, your supply, your demand zone is not enough for you to make an entry. You need a candlestick for you to get an entry signal. So this candlestick will communicate to me that sellers are now in the market and that they are about to move price. So what will I do? I will wait patiently and look at what happened. When price is pulling back, I put my trend line and price pull back to the zone. The next thing I want to see now, I want to see an engulfing candle or a bearish pin bar. And here we have a rejection of a pin bar, then followed by a bearish engulfing candle. And you can see that this bearish engulfing candle covers almost three of the previous bullish candle to show the presence and the force of sellers. I won't still make an entry. I will wait for a follow-up candle, which is this second bearish candle upon the close of it and it did not pull back into the previous one, I will make my entry. So this is my ideology behind candlesticks. Every candlestick is a fight between a buyer and a seller, and it comprises of three outcomes: either buyers win, sellers win, or nobody wins. So who wins determines the decision of your trade. And it also depends on the zone. If you are looking forward to sell, you want to see the sellers win. If you are looking forward to a buy, you want to see the buyers win in this choice. And I believe you have learned something new. Please do not forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified whenever we publish our next video.